In this video, we're going to talk about whether this is the worst bear market we have ever seen in crypto, or what it truly takes to be at the worst bear market, and what the sentiment usually looks like at the bottom. Me myself experiencing over 2 cycles in crypto, and I'm going to reveal my experiences. Moreover, we are going to take a look at the housing market, which is in absolute freeze mode right now. Very little transactions. Welcome to the easiest way out in crypto. What exactly is missing for the next bull market? Overall, in the whole market, there is too much uncertainty. The question is the inflation low enough for the Fed to lower the rates again? And right now, we see here Bitcoin again at 25,000 US dollars. It is going down. Bitcoin wants that cheap money back. It wants the risk on mode, the feeling for people, okay, we're gonna go all in risk on assets again, and people are just too fearful. And why is that? I can show you right now why exactly that is. The answer to that simply lays in this graph here. Cash yielding more than stocks. The S&P 500 earnings yield is profits from the company divided by the price of the company. Profits per stock divided by the price per stock, minus the 3 months treasury rate. And what we can see here is that the yield from stocks minus the 3 months treasury yield is negative, and the treasury bill is a risk-free yield. Government bonds, US government bonds, are the lowest risk investment, and you basically get a risk-free yield of 5% at the moment on government bonds. And this is exactly why nobody wants to buy stocks, nobody wants to buy crypto. Because why would you? If you get risk-free, a higher yield on cash. Of course, this is not going to last long, but stocks are historically very expensive right now at the moment. And we can see this happened 8 times during the past, and all of these times happened a recession afterwards. Be very careful, and having a high cash quote is what I'm doing right now, and I'll wait personally for a 10 to 15% pullback in stocks. More, we are seeing a freeze in the US home prices, and not only the US home prices, also the home prices in Europe. Sellers don't want to sell. They are maybe giving up a 3% mortgage, and they needed to change it against a 7% mortgage, which they currently get from the banks. And also, they don't want to, they compare those high prices they get in 2021 and 2022, and they want those high prices in 2023. And buyers cannot simply afford to pay these prices because of the high interest rates they need to pay. The prices stayed at a very high level while the interest rates came up to a very high level as well. And that means housing is extremely expensive. Imagine you want to buy a house for your family in a bigger city. It will cost you $1 million. Now let's say you got $200,000 of capital, and you gotta take a loan from the bank of $800,000. With a 7% mortgage, you almost pay $50,000, $60,000 just the interest to the bank every year. And now look at the income people have. Look at the income their jobs offer, and you can see that 50, 60,000 just the interest. You're not even paying back the loan. If you want to pay back the loan, you are probably close to 100,000 just for the house a year, and most people don't even make 100,000 a year. So housing prices are way too high. This needs to calm down dramatically. And if we come back to Bitcoin right now, I believe that if people get burned so many times that they are throwing the towel into the toilet, we are going to see the bottom of the bear market. The max pain theory is real. As I already said, during earlier this year, I expected us to actually reach this target of 41k and then come all the way down to 11k to fulfill the max pain theory. And I believe that in this accumulation phase, both of these targets are still a possibility. And I'm preparing for that as well as that. In the sums up, I want to talk about a very controversial man in the cryptocurrency field, Richard Hart, which has certainly been very quiet. I remember his times where he bragged a lot about his coin Hex making so fantastic returns and basically talking worse about everything else. He made really good calls. He is a very popular figure in the cryptocurrency field. He did a great job of Paulson. He got sued by the SEC right now, and which is very sadly to see that he became very inactive on his social media accounts. Maybe he needs a rest after this, and I hope he will come back at some point, because his projects feels like they really just also live because of his presence and because of his marketing. And we can see right now that Hex is down minus 99%, which is a lot. I'm also dollar cost averaging here, right here, and at these prices, because I think this is just a major support level, and it definitely makes sense to buy up a position right here, even though we don't know what is going to happen in the future. If he will return to his activity levels we have seen over the past couple of years, it has been really insane. He made a lot of content, online streams for hours, being active on Twitter for hours, so we gotta maybe respect that little break here and see if he comes back. This will then also reveal in a massive price increase for Hex when the founder returns and continues the marketing. Last but not least, we're going to take a look at pZEN, which is a very well-designed coin which is launched on the Pulse chain. It is a taxable token. With every transaction, a 2% mark-off is occurred. Wherever you transact pZEN, the transaction will cost you 2%, and those 2% will get redistributed to all the people holding pZEN, the Zenites. The more volume in pZEN is, and the more you hold of pZEN, the more you benefit from people trading. Actually, it rewards the holder and kind of penalizes the trader, as it should be in crypto. If you take the leap of faith to invest into a cryptocurrency, you gotta do it long term. You want to be rewarded for holding long term, and if you want to trade, you gotta have to pay a 2% mark off, and that is getting redistributed to the holders, and that is leading to a deflationary real yield, which adds up to approximately 16% a year. And this is real yield deflationary. It's taking from people, and also deflationary because a 0.2% of every transaction is going to get burned. And there's also a charity wallet where 0.1% goes in. And with that, this is a very nice protocol for the next bull run. The community is very strong, and they are going to survive the bear market for sure, and you get rewarded for holding it. Right now we're almost here at rock bottom prices, market cap of only 555,000, which is a very nice investment thesis, and in my opinion it's a good risk reward ratio. If you haven't done so already, go over to my Twitter right now and click the following button, and also click the subscribe button on YouTube, and write your comments down below, and also leave a thumbs up on YouTube, subscribe to my YouTube channel, and I will see you guys tomorrow in the next one. Easy way out.